Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? Well, the Dow's up about 20 points. NASDAQ getting hit pretty hard. It was down 200, now down about 150. The S&P right around the 4370 level. So it's come back in a little bit, but we're sitting right on the 10-day. Now, if we can't break below the 10-day, now what we've had in this rally up is we've been bouncing off the 10-day. So if you're a big bull believer, this would be time to add to your positions because we might get a little bit bounce off this 10-day. I think we're going to break through it eventually. Now the Russell, which is the IWM, these are the small caps, that's already below its 10-day, been down there a couple days. It's trying to get back above it, but I don't think it will. I think it's coming back in. Now this is just my take. Once again, the Dow, the QQQ, and the S&P, they're all touching the 10-day today, and they might get a bounce higher, but I think eventually they break through the 10-day, break through the 20-day. Now, obviously, the bulls are still in charge until we can get below the 20-day. I would say that the bulls are still in control of this market. And this has been a runaway market, a lot higher than I thought it would go. Now, a lot of people think we're going to race up to new highs, make new highs in all the indexes. And that's a possibility, but that's not what I believe. Now, of course, what you believe may be completely different. Half of you on here, in theory, would be saying that, yes, we're going higher. Half of you would be betting that we're going lower. That's what makes a market. You have to have a buyer and a seller to make the market. Half the people are betting down, half betting up. All right, so my take is we're going to head lower, but we'll see how that plays out. Let's get over to the real estate market now and talk a little bit about that. Now, J.P. Morgan's leading housing analyst came out and revised his estimates for the housing market this year. He says that home prices will not fall this year. See, now he was calling for a 5% drop this year, but he's saying that he's adjusting it and he's saying that we're going to be flat for the year. Now, will he be right? I'm not sure. I think we're still going to come down in the second half of the year. The first half of the year, we've already come down. Year over year, we're actually down in home prices. Okay, but there's a lot of comments in this comment section. Now, here was one. Okay. The comment in this article said to buy a home because renters make other people rich. Renters make other people rich. It's like throwing your money away, right? Now, he says the only way to create wealth is to own a home. Now, don't get me wrong, real estate is responsible for the most millionaires ever made. But there is a good time to buy real estate and there's a bad time to buy real estate. It's kind of a timing thing. Sometimes it's just dumb luck. Sometimes you can just get dumb lucky. Now, it's good to get dumb lucky. I like to be dumb lucky, right? Okay, here's the thing. Let's take my buddy again. Now, my buddy, he bought for 1.3 million and it came down from 1.6 to 1.3 and he thought that was a bargain. All right, well, let's say he got a real bargain, right? A real bargain. And he got it for $1 million. Okay, 950 square feet for $1 million in San Jose. I guess that's a bargain. All right. So anyways, so he found this bargain at $1 million. Now, what this guy was saying, that you should pay cash for your home because then all you have to pay is property taxes. Don't rent a home. Pay cash for the home and just pay the property taxes. Now, let's say my friend was sitting on $1 million in cash. He did not have $1 million in cash, so he got a loan, obviously. But let's say he did have $1 million in cash, and let's say he went out and bought that home for $1 million in cash. All right. Now, what could have been his alternative? His alternative could have been to rent, right? Now, to rent that home would have been $3,000 a month. So he paid $1 million cash, or he could rent for $3,000 a month. Now, if he had $1 million in cash, he could take that cash, put it into bonds, put it into a money market, get a little over 5% on his money. So he'd be bringing in about $55,000 a year. Okay, right? So anyways, so $3,000 a month rent, the $55,000 a year that he'd be bringing in on those bonds would pay for his rent and give him about, rough numbers again, about $20,000 a year left over. Now, let's say that this guy, the housing analyst at JP Morgan's right, and that he says we're going to stay flat for many years to come. Let's say we do that. Okay, let's say we stay flat for 5 years. All right, so if you're paying $3,000 a month rent, or you put the $1 million in, see his $1 million, he's still got to pay $12,000 a year property taxes, so roughly $1,000 a month. So he's out $1,000 a month, but this guy over here that's renting for $3,000, he could be making a couple thousand a month. So it's about $3,000 a month different. Now you multiply it over 5 years, this guy comes out $150,000 a head, and it's more than that because you got to take into account when this guy finally does sell the property, the closing costs. Now, but Mike, rent's just throwing your money away. It is and it's not. Right now is a good time to be a renter. It's a bad time to go out and buy a home. I love real estate. Real estate will make you a lot of money, but it's not the right time to buy. It's just not. We're in this bubble. We inflated the bubble bigger. Now, if you go back to the 2007, you pull up the Yahoo articles from back in 2007. What were they saying? They were saying we're in this incredible housing boom, right? They were saying that housing is the safest investment you can make, right? Okay, there was one guy, the Big Short guy, right? He was betting against housing, and he was trying to warn the people, right? But everybody thought he was a crazy man. Well, what happened? What happened in 2008? We started coming down. We dropped 34%, right? That's a big drop. That's a big loss of wealth. So owning a home can make you wealthy. That's true. It can build some equity. But when the equity's going down, that's not the time to be owning a home. It can also make you lose everything you have. Look at my friend. He saved up and he put $300,000 down. That's all the money he has. He made a stretch to buy that home. He thinks it's going to $2.5 million. Now, maybe it will for him. Maybe it won't. But look, it's not the only way to get rich. There's a lot of ways to get rich, and home ownership is a very good way to get rich. I agree with that. But also rental properties. Rental properties are a good way to get rich. But once again, why get a rental property if you're not cash flowing? Nobody wants the big alligator. They don't want that big alligator eating their money every month. And that's what negative, when your mortgage payment's higher than the rent coming in, you got to come up with the difference. That's an alligator. You don't want to be in the rental business when that happens, right? You don't want to do it. Okay, so what we got going on now in the real estate market is it looks like it's a strong market. It looks like we're in this raging bull market because a house comes on and sure enough, a buyer comes. But what I want you to do is pull up Zillow. Pull up Zillow for your area and look at houses that have been on longer than 2 weeks. Maybe even go out to houses that have been on 30 days. What do you notice? Well, those houses that have been on over 30 days, about 50% of them have a price reduction. Isn't that interesting? They couldn't get the price they want, so now they're reducing the prices. Look, this is not a bull market. This is just a low inventory market. The inventory is going to be coming. We talked about that in my last video. You can go back and watch it. It's going to be coming from a lot of things. Vacant homes, investors are running to get out. Let me talk about that for a second. All right. So Sternlicht, Starwood, their real estate investment trust, right? So Sternlicht Starwood's real estate investment trust. It's basically a $12.8 billion investment trust. Now they're going to be liquidating 2,000 rental homes. Now, when did they buy these homes? Oh, they kind of bought them at the top of the market about a year ago. And they're down on every single property, right? So they're going to be selling these at a loss. They're getting out because they realize that they made a bad investment. They're getting out because people that are invested in this real estate investment trust want their money back, but they can't give them the money back because they're locked into these homes. What's happening to these homes? The homes are coming down, so they're going to sell 2,000 of them to get out at a loss. Now, why are they selling them now? Why wouldn't they just wait till they get to new record highs? Why wouldn't they just wait till they get to the price Billy Bob got out at? Why wouldn't they just hold on to them? Because they see the writing on the wall. They see the prices are coming down. They see the investors that are investing in these want their money back, and they can't get them their money back because the prices are already down. So the investors are going to lose money either way. So they might as well take the big hit now, because they're going to take a massive hit if they wait, because prices are still coming down. It's just the way it is right now. Now, okay. So right now, we got new homes. New homes, like that's all the rage right now. New homes, new homes, new homes. And new homes normally make up 13% of the market, but right now it's over 1 in 3 homes that are sold is a new home. It's a new home because that's all there is for sale, right? The average person, they're not selling right now, but you can go out and you can buy a new home. But when you look at the prices of new homes year over year, last year they were 10% higher than they are now. New homes have already dropped by 10%. This market is coming down. Now, the media, they want you to think it's a bull market. They want to think that you got to hurry up. You got to get in. This is the only way to get rich. If you don't buy a house now, you're never going to get a house ever again. It's just not going to be a house for you if you don't jump in. That's what the media wants you to think. Now, what's going on in a lot of these markets? Okay, what's going on? Okay, what's happening is a seller, they put their house for sale, right? They put it for sale, let's say $1.5 million, and they don't get any offers. They get 0 offers. Well, the seller, who they get pissed at? Well, they get pissed at the dumb realtor. Believe me, I know this. Okay, so the seller's upset at the realtor. What doesn't sell? Because it's the realtor's fault. It's not that their house is priced too high. They're priced their house where Billy Bob is. You can't get that price anymore. If they reduce their price, they would be able to sell their house, right? But they want that price that Billy Bob got because he was their next door neighbor. I mean, he lived right next door, and they're not going to take a penny less than him. So they put their house on the market. They're pissed off at the dumb realtor, right? So what do? Well, they take the house off the market. Why? Well, because it's not selling, because nobody's coming to look at it anymore. First 2 weeks pass, they either have one choice, reduce the price or take the house off the market. It's not going to sell, right? So they take the house off the market. So this is making it look like prices aren't coming down, but prices are coming down, because if they weren't coming down, they could get that high price. But no, prices are coming down. And when prices are coming down, you have to get underneath the market. You see, if prices were going up, they could sit at that $1.5 million and the price would come up and it would eventually hit it. But now prices are coming down. They're priced at $1.5 million, but the market's at $1.4 million, headed to $1.3 million. They got to get down to that $1.3 million so that their house gets sold. But right now they don't. They pull it off. They're pissed at the dumb realtor, right? Okay, so that's what's happening. But look, eventually they will be forced to sell it. Eventually something will happen in their life. A job transfer, a layoff, a divorce. A divorce is very common. I got wealthy on divorces. People get divorced. I get 3 sales. I get to sell their house, find them each another house. Divorces make realtors rich. Take my word for that. It made a lot of money. All right, so the headline was, home prices won't fall this year. Now, if I were writing an article, what would my headline be? Well, it would be kind of like this. Delinquencies spike, right? Okay, foreclosures are rising, all right? Bankruptcies are skyrocketing. Short sales and REOs are coming. Real estate owned, meaning the bank owns it. And my headline would be, look out below. Because that's what's going to happen. A lot of people don't see it. Go back, look at the articles in 2007. They would tell you everything's great. Look at the article now. Everything's great. Real estate's safe. It's not going to fall. I'm telling you, this is just my opinion. Look, I don't want to influence anybody. Buying a home is a very personal decision. If you feel comfortable going out and buying a home and you can easily afford the home, then do it, right? If that's what you want. If it's your dream, dream home. If you're in the rental business, make sure that rental's cash flow. No, there's no reason to buy a rental, right? You got to have cash flow when you rent. But look, it's a very personal decision. You can go out and buy a home. You can go out and buy a rental. You can sell your home. This is your decision. What works for you? It's not based on me, but look, in real estate, there's three things you got to look at, right? Okay, the three things determine real estate, how they're selling, right? Okay, interest rates would be one, right? Right. The price of the home would be another one, right? Okay, so right now rates are high, prices are high. What's the third one? Oh yeah, wages, how much you make, right? Now, okay, now could wages be risen enough to make homes affordable again? I suppose they could. I mean, you guys think like what would it be, like a $45 an hour minimum wage? And don't worry, that wouldn't be inflationary at all, so it would all work out. So why don't we just raise the minimum wage to $45 an hour? Look, this is a common math problem, right? Homes are not affordable. The average household income is probably right around $70,000, maybe a little below that for a household income. All right, now what does it require a household to purchase the average home? You got to be six figures, okay? So people cannot buy the homes up at this level. I don't see interest rates coming down. I don't see wages going to $45 an hour for the minimum wage. So what does that mean is going to happen? It means that prices are going to come down. Now that's just my take. Your take may be completely different. Maybe you think wages are going to $45 an hour for the minimum wage. Maybe you think interest rates are going back to zero again. That's perfectly fine also, and then prices can shoot up. But look at what people don't take into effect also. Let's say we stay stable for 5 years, right? All right, what's inflation doing, right? Inflation, the government will tell you it's 5%, so we know it's at least 10%. Well, over 5 years, that's 50% right there. You've lost 50% of your purchasing power if the house stays the same. If inflation stays at 10%, I think we're at 10% now. Now, of course, Biden's going to tell you it's down there below 5%. I don't buy it. Don't buy it. I'm sorry. Maybe you do. Maybe that's your take. But my point is that something's got to give. And what's going to give is prices. Anyways, if you like this stuff, give me the thumbs up. Why not? I'm Tall Mike. Get out there, everybody. Have a great day. Bye-bye now.